If you are considering investing in real estate, look no further. You've come to the right place. Real estate investment is one of the most trustworthy business ventures where you can be guaranteed great returns. It is an appealing investment thanks to its growth potential, consistent returns, and passive income. However, even though real estate investment is known to be profitable with fewer risks compared to other business ventures, this will only happen if you know the right steps to take, particularly as a beginner. Therefore, if you want to invest in real estate and not feel intimidated, these are some of the most crucial things you need to know. Stick around to the end, since our last point is easy and lucrative. Do your research. Just like any other kind of investment, you must do your research before investing your money. The first thing you need to find out is the amount of money you need to invest in real estate and how much you have or need to borrow. The other crucial thing to know is the duration you need to wait before you begin to earn. Knowing such things will help you determine if investing in real estate is worth it. Also, compare this business venture with other business ideas you might have. Weigh the options and decide which one looks more promising. Is it real estate or another business? You can also consult a real estate expert or a business person who has been in real estate for a long time and decide based on the information they share with you. Understand the market. Knowing about real estate as a whole is not enough. It should just be a way of helping you decide if real estate investment is for you or not. If, for example, you conclude that this is something you want to venture into, you must then study the area of interest. And when doing your research, bear in mind that different geographical areas have different demands. So ensure you study the area of your choice and know most, if not all, of its needs and preferences. Do your due diligence. Dear real estate investor, you are new to this area of business. Please, even if you think the deal is great, don't be so quick to make the bank transfer. After you've made up your mind to invest in real estate and have chosen a specific property, you must conduct thorough research of the entire deal. Review property documents, financials, profit and loss statements, and tax results from the former owner. A property inspection, feasibility study, and any other thing you want to know about the property should follow simultaneously. As a beginner in real estate, it's not uncommon to get too excited about owning a commercial property and miss out on crucial details. Thus, to avoid making costly mistakes, have a firm understanding of what needs to be inspected and analyzed before closing the deal. Be wise when investing in real estate. Knowing when and how to invest in real estate can protect your money from going down the drain. It'll also be easier to manage your properties regardless of the distance. Besides, real estate can give you an opportunity to have a passive income, probably for life, but this will only be a dream unless you know the right channels to follow and when to take a bold step. Define your strategy. Both your time horizon and your risk tolerance should guide your plan. Seeking low-risk assets in which to dabble? Real estate investment trusts are likely a suitable choice since they enable you to invest in real estate-related enterprises. Those with a higher risk tolerance may decide to avoid real estate altogether. Flipping houses is a common short-term technique in which a home is purchased entirely and held for a little while before being sold. This is most effective in real estate markets when values are growing. This technique is advantageous since it eliminates the need for leasing, maintenance, rent collection, and administration. In addition, the return on your investment will be realized quite rapidly. Long-term initiatives entail purchasing and renting out real estate. Your investment will be affected by your property's rentability. It is advisable to hire a reputable property management firm to handle landlord responsibilities such as tenant screening, leasing, maintenance, and rent collection. Consider flipping homes. House flipping may be profitable if you know what you're doing. Buying a house at a cheap price, renovating it, and then selling it for a profit is not as simple or fast as it seems on television. In order to limit the period of time you pay for the house, there is a greater risk associated as you must precisely forecast remodeling expenses and sell promptly. Keep in mind that there is always the possibility that the house won't sell or will take a long time to sell. However, if you have the DIY skills to refurbish a property or a partner who does, house flipping may be the appropriate real estate investment strategy for you. Buy REITs, or real estate investment trusts. REITs enable you to invest in real estate without owning the property itself. Companies that hold commercial real estate, such as office buildings, retail spaces, apartments, and hotels, are sometimes likened to mutual funds. REITs often provide significant dividends, making them a favorite retirement investment. Investors who do not need or want a monthly income might automatically reinvest dividends to increase the value of their investments. Are REITs an attractive investment? Yes, but they're also complex. Some are traded on an exchange like stocks, while others are not. Non-traded REITs are difficult to sell and may be difficult to evaluate, so the kind of REIT you acquire may have a significant impact on the risk you assume. New investors may choose to limit themselves to publicly listed REITs, which may be purchased via an internet broker. A brokerage account is required for this. It takes less than 15 minutes to form a company if you don't already have one, and many demand no initial investment, though the REIT itself will certainly require one. Consider investing through crowdfunding. Crowdfunding utilizes social networks such as friends, family, and coworkers connected through social media websites such as Facebook, Twitter, and LinkedIn to spread the news about a new company and attract a large number of individual investors. Crowdfunding has the ability to significantly increase the number of possible investors outside the conventional circle of insiders, owners, family, and venture capitalists. Recent changes to legislation governing who may invest in real estate through crowdfunding and have now paved the path for more crowdfunding. Real estate industry organizations have already jumped on the crowdfunding bandwagon, promoting relatively low-risk access to the U.S. real estate market. Crowdfunding for real estate is not a completely new phenomenon, the Commercial Real Estate Development Association said in a statement released in the autumn of 2011. Many new participants have joined the market. Although each of these platforms has its own specialty and approach, as well as varying minimum commitment amounts, they are all designed for qualified investors who fulfill particular standards for net worth and/or yearly income. In contrast, crowdsourcing under the Jobs Act will allow many more small investors to participate. What advantages and disadvantages can crowdfunding provide investors? In a nutshell, it boils down to risk on both sides, especially the amount of internet information that investors are willing to ingest. According to the survey, both real estate developers and investors may earn substantial financial returns via crowdsourcing, and both can mitigate their risk exposure. Invest in a rental property. To assess if a rental property investment will be profitable, you must first make an accurate estimate of the property's expected return on investment, or ROI. For many kinds of investments, the ROI may be calculated using a simple formula: returns minus costs divided by costs. In the case of a stock investment, for instance, if you purchase shares for $10,000 and subsequently sell them for $12,000, your return on investment is 20%. That is a net profit of $2,000 divided by the original price of $10,000, giving you a return on investment of 20%. In practice, the ROI calculation will be more difficult as you will need to account for expenditures such as capital gains taxes on your stock sales and broker fees spent when purchasing and selling shares. Things get much more convoluted when trying to estimate the return on investment prior to investing in a rental property, since so many factors may impact both the revenue potential and the costs of the property. You must make estimates based on whatever historical data is available on market rental rates, vacancy rates of comparable properties in the region, continuing expenditures for maintaining and managing the property, and other factors that are subject to change. As previously said, rental property investments include the same risk of loss as any other sort of investment, and profits are never guaranteed. Rent out a room. Be aware that your city may have rental-related zoning regulations. These restrictions might prohibit you from renting to unrelated individuals without permission or a license. Local landlord-tenant legislation may be discovered by checking the state's official website. A rental agreement is a legal contract that establishes the conditions of tenancy for a certain time period. A description of a house as well as the room being leased should be included when renting a room in your home. For example, second-story small blue bedroom or first-floor back bedroom. Include the rent amount, the frequency of payment, weekly or monthly, and the due date. You may choose to collect a security deposit, which must also be specified. This will guarantee that your tenant is aware of your expectations and what is permitted or prohibited. Do you permit smoking in your residence? Are there designated smoking areas? Or do you strictly prohibit smoking on your property? Is your tenant permitted to do laundry whenever? What type of real estate investments appeal to you the most? What else would you like us to talk about in our upcoming videos? Let us know in the comments below. And make sure to subscribe and turn on notifications so you don't miss out on any of our videos.